Hey guys, welcome to Trendemy monthly market review for July 2016. I'm Rafael Kanslita and I'll be sharing with you on what has happened for the past 5 weeks in the market. I'll be sharing with you on the weekly performance of the Nasdaq, S&P 500 and Dow Jones, followed by an observation and commentary on the market, and I will share with you Trendemy's monthly best and worst stocks, and finally what are the stocks to watch, okay, based on Trendemy's watch list. So how has each of the stock market index been performing? As you can see, all three has been experiencing a positive uptrend. Okay, only that on the final week, week 5, it experienced a decline in performance, except for Nasdaq. In fact, if you were to see Nasdaq here, since week 1, week 2, 3, 4, and 5, it has actually beaten Dow Jones and the S&P 500 in terms of weekly performance. There are multiple reasons for this. I will cover very soon. Now let's take a look at how Dow Jones performed based on this weekly chart since 2016 begin. Okay, it has been experiencing a very strong bull run since early February, after which it consolidated for a while for at least about 2 months before it continued its uptrend. Now, let's take a look at the last 5 weeks in detail. As you can see that from 27 June onwards, okay, it actually rebound strongly, okay, from the 200 daily moving average and 50-day moving average line, okay, on a strong volume, after which it continued moving upwards before taking a rest on 25th July. In fact, from 27 June to 18 July, the volume, okay, has been moving up slowly and positively. What about S&P 500? Similar to Dow Jones, okay, after a quick decline, it finds support somewhere at 185, and then it continued its uptrend and consolidated in the mid of April before it began its explosive price up in late June. Let's take a look again on what happened in the last 5 weeks since 27 June. Again, same thing. After that pre-Brexit news, you can see that it actually spiked up, okay, across 200 daily moving average and 50 daily moving average on a very strong volume, and it continued its rise, okay, until the final week on 25th June. If you notice carefully, the price has been very tight. However, the volume here has been on a decline. What about a tech-heavy Nasdaq? Same thing, it went on a bull run before consolidating from mid-April until late June before it actually soldiered for 5 weeks of solid gains. If you were to take a look after piercing through the 50-day and 200 daily moving average, what you notice that the price continued to go up with the volume also increasing. And at this point, what we're actually experiencing is between the 50-day and 200 here, what you're experiencing is a golden cross, meaning the 50 moving average crosses above the 200 moving average line, and as you can see, this 50-day moving average is now moving upwards. Okay, this indicates a bull run. Okay, it seems to go for quite some time. Okay, now let's take a look at some observation and some comments from me about the market. Okay, from 27 June to 3rd July, the equities rebounded due to multiple things as the week went on. Initially, the rebound was the result of oversold conditions on a short term basis. It was extended by hopes for stimulus from global monetary authorities like the Bank of England and European Central Bank. The rising hopes for global stimulus relegated the rate hike expectations to an afterthought. On the 4th July to 10 July, the stock market continued its post-Brexit rebound. S&P 500 flirted below its all-time high, with most of the weekly advance came in response to the Friday's release of the June employment situation report, where it beat the consensus. Initially, post-Brexit worry gave a defensive start to the week, but the cautious tone simmered by the weekend, at least as far as the US stock market was concerned. The non-existent earnings growth may have contributed to the Friday rally in the market, since it will be used as an argument against a rate hike in the near term. Although rate hike expectations inch up, it doesn't warrant any alarm among market participants. The likelihood for rate hike in near term is still deemed low. And last week, from 11 July to 17 July, cyclical sectors paced the advance amid rising stimulus hopes. However, those hopes remain on hold for the time being after the Bank of England made no changes to its policy stance on Thursday. Expectations remain high that the central bank will ease when it meets again in August. The Bank of Japan meet on July 28 and 29 amid elevated expectations that new stimulus measures will be announced at the end of the meeting. The stock market flirted with its first weekly decline in 4 weeks, but steady buying interest on Friday helped equities secure yet another round of weekly gains during the period between 18 July to 24 July. Quarterly earnings were in focus throughout the week, with 75% of S&P 500 members still due to report their earnings. So far, the results of the earnings has been mixed. Although more quarterly reports will be featured the next week, central banks will return in the spotlight, starting with a Wednesday policy statement from the Federal Reserve. The Fed will be followed by the Bank of Japan, which will announce the results of its meeting on Friday. Investors have not shown much concern about the upcoming Fed meeting. In fact, the rate hike expectations for the next two meetings remain low. And finally, for this week, from 25 July to 31st July, quarterly earnings were largely responsible for the differential in returns, with the Nasdaq benefiting from upside surprises reported by heavyweights like Apple, Alphabet, Amazon, Facebook, Celgene. Conversely, the Dow was pressured by weak results from ExxonMobil and disappointing comparable sales result from McDonald's. The broader S&P 500 split the differences between the Dow and Nasdaq, finishing the week essentially where it started. In addition to heavy earnings releases, investors had to review the expectation for monetary stimulus from global central banks. The Federal Reserve made no changes to its policy stance, only hinted at the possibility of a rate hike in the near term. The central bank sheds its lukewarm outlook on Wednesday, 2 days before the Friday release of the advanced reading of second quarter GDP, which missed estimates. Also on Friday, the Bank of Japan called for just slight adjustments to policy, undershooting market expectations for aggressive stimulus measures. As usual, the rate hike expectation receded throughout the past week. Now, personally, in my opinion, although there has been a slight fluctuation in the performance of all the three market indices, I'm still very, very, very optimistic about where we are going from here on. Why? Because from the way I see it, um, we have actually gone through a very long consolidation. Okay, actually since the year 1999. Okay, during the bubble burst, okay, dot-com bubble, and it's actually stretched all the way until the year 2009. Okay, this is a very long consolidation, about 10 years. This actually is a repeat of itself from the year 1960s to 1980s, and also from 1930s to 1940s. If you notice from this graph, which I actually plucked out, okay, from stock charts, okay, this is a monthly chart from 1926 until now. After a very long consolidation, what happened is that it experienced a super bull run. I call it a super bull run because in this period, this is where you can make more than 100% profit for every stock trade that you make. Of course, you will still make losses, but you just have to manage your risk very well. Same thing on the second consolidation, okay, about more than 10 years of consolidation, it actually spiked up. If you notice, the first bull run compared to the second bull run, this gradient isn't as steep as the second one. So in my opinion, for this the present one today, I expect the gradient to be in fact even steeper than the second one here. Hey guys, now let's cover on Trendemy's monthly best and worst stocks. For Trendemy's monthly best stock, I'm going to cover on Yirendai Limited. Okay, basically it's a online consumer finance marketplace that connects borrowers and investors primarily in the People's Republic of China. If you were to look at the chart here, okay, the the stock has been experiencing a good uptrend, okay, since the month of February, mid February 2016. And in the period of July itself, right, July 2016, Yerendai actually experienced 88% profit gain. Okay, as you notice that the gradient of this line is in fact very steep and is above the 50-day moving average support line. This indicates a very bullish sentiment for this Yerendai. The second stock, okay, that proves to be a good one to buy is called Hudson's Technologies. It's a refrigerant service company in United States and internationally. Um, if you notice here in the chart, it experienced a very long consolidation, okay, zigzag up, down, okay, not moving upwards or downwards. It just maintained inside this one long channel here since March 2016. However, something must have happened on 18 July that actually caused the volume to spike up. And because of that, in the last 2 weeks, it experienced 39% profit gain. Now, for Trendemy's monthly worst stocks, the first one is Orchid's Paper Product Company. Basically, it manufactures and sells tissue products for at home and away from home markets in United States. Some of its products include paper towels, bathroom tissues, and paper napkins. Now, this online Orchid's product company has been experiencing a good uptrend. Okay, staying above the 50-day moving average. However, about the last 3 weeks, it starts to decline and it pierces through the 50-day moving average line only to gain support on the 200-day moving average line. Because of this decline, it experiences a 40% 14% decline in the last 5 weeks. And the next worst stock, okay, in the spotlight is by stamps.com. Okay, it provides an internet-based postage solutions in the United States. Now, here's the thing. Stamps.com has been experiencing a decline, okay, since March 2016. It just keeps dropping. Okay, it stays for a while below 200-day moving average and 50-day moving average before it tried to pierce through the 200 daily moving average line, but it failed because this is the resistance line, and it continued to go below. This caused a drop in negative 12% in the last 5 weeks. Now, let's go through the last part of this segment, Trendemy's stocks to watch. I have several stocks for you to consider in the next 1 month. All right, we will review again in the next monthly market review video. Okay, the first one is Dave and Buster's Entertainment, or the counter ticker is called Play, Play. Um, this stock, okay, the price has been consolidating, didn't move up or down. In fact, after the spike up in early June, it found support around $44. Okay, and now it has actually went down, and now it's actually been pulled back to the 50-day moving average line. Let's see how it goes. Maybe the market, overall market improves. This stock might actually rebound and move upwards. Paycom software, ticker symbol PAYC. Okay, what you notice is that the price has been going up. Okay, finding support. Okay, one time above this 50-day moving average, and it just keeps going up and up and up. In fact, if you notice here, the 200-day moving average is also moving upwards. Okay, it's no more going sideways. It's no longer flat. In fact, it's going up. From what I see here is that in the last few days, all right, here is trying to challenge itself, okay, to go to its all-time high price. Let's see how it goes, okay, for the next few weeks. I got this strong feeling that this uptrend will continue on for the next few weeks. Okay, what about Mesa Laboratories, or MLab in short? It found support, okay, above the $110 line. Okay, after a good gap up in strong volume, after which it rest for a while, okay, not moving up or down so much. And finally, in the last few days, okay, it pulled back to this 50-day moving average. Let's watch to see whether it will actually rebound in the next few weeks. Okay, what about Coresight Realty Core, or which in short we call it COR? Again, the price went up very nicely since the early 2016, and then never tested the 50-day moving average line, and only this time it actually, after around early July, it decides to consolidate and now pull back to the 50-day moving average line. Apart from that, if you notice carefully, this support line around $80. Okay, let's hope that this price don't go below this support line. Okay, if it doesn't, this means it's very bullish. It has a chance to go upwards, only if the market permits so. How about Clearfield? CLFD in short. For this one, it has been experiencing a long consolidation. However, the last few days, it there is an attempt to actually go for the all-time high price. From what I see, this is a good chance that it might, okay, in the next few weeks. But let's see how it goes. Anika Therapeutics, ANIK, okay, has found support on the $49 line, okay, after a good strong run. Now it consolidates and it actually pulls back to the 50-day moving average. Let's see how it goes. Let's see if institutional investors comes into play and help to push this price up. Okay, I'm very optimistic about this Anika. Why? Because 50-day moving average and the 200 daily moving average, intermediate term and the long term, okay, is showing that it's moving upwards. Okay, I think this price is just taking a break for a while before it actually moves up. Okay, with that, it's time to wrap up. Okay, click the link below and subscribe for more profitable insights brought to you by Trendemy and myself, Rafael Kanslita. Okay, expect more of these great review and insights about the market in every month from me. Okay, please do support and please give your feedback and comment in the link below. All right, thank you so much.